Good evening. Welcome to our special broadcast. In a landmark move yesterday, the world witnessed a significant shift in international trade policies. President Donald Trump announced a series of sweeping tariffs that are set to reshape the economic landscape. These tariffs have sent shockwaves through global markets, causing immediate reactions from traders and investors worldwide. The financial community is abuzz with speculation and concern. Dubbed Liberation Day, this policy shift aims to redefine America's trade relationships. The administration believes this move will protect domestic industries and create jobs, but it has also sparked widespread debate and controversy. Critics argue that these tariffs could lead to a trade war, with other nations retaliating with their own tariffs, potentially harming global trade. Supporters, however, see it as a necessary step to level the playing field and reduce the trade deficit. The impact on American industries is expected to be profound. Manufacturing sectors, in particular, are poised to benefit from reduced competition from foreign imports. This could lead to a resurgence in American-made products and a boost in local employment. International leaders have been quick to respond. Diplomatic meetings and trade summits are being convened to address the potential fallout and negotiate new terms of trade. The global community is watching closely as the situation unfolds. Economic analysts are providing varied forecasts. Some predict short-term volatility but long-term gains for the U.S. economy, while others warn of prolonged economic uncertainty and potential recession. Public reaction has been mixed. Protests have erupted in some areas, with people voicing their concerns about rising prices and potential job losses in industries reliant on international trade. Social media is flooded with opinions, both for and against the tariffs. As we continue to monitor this developing story, stay tuned for more updates and expert analysis. This is a pivotal moment in global trade, and its repercussions will be felt for years to come. Thank you for joining us this evening.
Today we declare our economic independence. The United States will impose a 10% tariff on all imports, effective April 5th. Additionally, we will implement higher reciprocal tariffs on nations that have taken advantage of our trade policies.
The immediate market reactions have been turbulent. The trading floor was a scene of chaos, with traders frantically trying to make sense of the sudden downturn. The atmosphere was charged with tension as the news spread like wildfire, causing a ripple effect across various sectors. Traders were seen shouting orders, their faces etched with concern and urgency. The sudden shift in market sentiment was palpable, and the uncertainty was almost tangible. It was a stark reminder of how quickly things can change in the financial world. U.S. stock futures plummeted following the announcement, sending shockwaves through the financial community. The screens were awash with red, indicating widespread losses. Investors were caught off guard, and the initial reaction was one of panic. The decline in futures was a clear signal that the market was bracing for a rough ride ahead. Analysts were quick to point out that the drop in futures was not just a knee-jerk reaction but a reflection of deeper concerns about the economic outlook. The uncertainty surrounding the announcement had left investors jittery, and the market was struggling to find its footing. With significant declines in major indices, the Dow Jones, S&P 500, and Nasdaq all saw substantial drops, reflecting the widespread impact of the announcement. The charts showed a clear downward trend, with no immediate signs of recovery. Market analysts were busy revising their forecasts, trying to gauge the long-term implications of the current situation. The declines were not limited to any one sector. They were broad-based, affecting everything from technology to consumer goods. The market was in a state of flux, and investors were grappling with the new reality. The S&P 500 futures are down 3.5%. This significant drop was a clear indication of the market's apprehension. The S&P 500, often seen as a barometer of the overall market health, was sending a distress signal. Investors were left wondering how long this downturn would last and what the broader implications might be. The decline in S&P 500 futures was particularly concerning because it suggested that the market was pricing in a prolonged period of uncertainty. The usual safe havens such as bonds and gold saw increased interest as investors sought to mitigate their risks. The Nasdaq 100 futures fell over 4.3%. This was a stark reminder of the volatility that can grip the tech-heavy index. The Nasdaq, home to many of the world's leading technology companies, was hit hard. The decline was a reflection of the market's concerns about the future earnings potential of these companies. The tech sector, which had been a darling of the market for so long, was now facing a reality check. Investors were re-evaluating their positions, and the sell-off was a testament to the shifting sentiment. The once high-flying tech stocks were now under pressure, and the market was adjusting to the new normal. And the Dow Jones Industrial Average futures dropped by as much as 1,000 points. This dramatic decline was a wake-up call for many investors. The Dow, often seen as a benchmark for the broader economy, was signaling trouble ahead. The 1,000-point drop was one of the largest in recent memory, and it underscored the severity of the situation. investors were scrambling to make sense of the news and adjust their portfolios accordingly. The Dow's decline was a clear indication that the market was bracing for a period of heightened volatility. The uncertainty was pervasive, and the market was struggling to find a clear direction. Major multinational companies with extensive global supply chains, such as Apple, Walmart, and Nike, experienced sharp declines in their stock prices during after-hours trading. These companies, which are often seen as bellwethers for the global economy, were not immune to the market's turmoil. The declines in their stock prices were a reflection of the broader concerns about global supply chains and economic stability. Apple, with its extensive manufacturing operations in China, was particularly hard hit. Walmart and Nike, both heavily reliant on global supply chains, also saw significant declines. The market was clearly worried about the potential disruptions to these supply chains and the impact on future earnings. The after-hours trading session was a stark reminder of the interconnectedness of the global economy and the ripple effects that can be felt across different sectors.
These tariffs represent a major blow to the world economy. We are assessing our options and urge the US to reconsider these measures to prevent further escalation.
The increased tariffs on countries like Vietnam and Bangladesh will undoubtedly raise production costs. Brands will need to make tough decisions, potentially passing costs on to consumers or seeking alternative manufacturing hubs. Super vogue business. Economists are divided on the potential long-term impacts. While the administration argues that these tariffs will rejuvenate domestic industries, critics warn of possible inflationary pressures and strained international relations. Super Riders +1, Business Insider +1. As the April 5th implementation date approaches, both domestic industries and international partners are closely monitoring the situation. The anticipation is palpable, with stakeholders from various sectors expressing both concern and cautious optimism. Many are preparing for potential disruptions, while others see opportunities for new market dynamics. The global community is on edge, waiting to see how these changes will unfold. The coming weeks will be critical in determining how these tariffs reshape global trade dynamics. Financial analysts are busy crunching numbers trying to predict the long-term effects on different industries. The stock market is already showing signs of volatility, with investors reacting to every new piece of information. Shipping companies are also bracing for changes, as new tariffs could alter trade routes and shipping costs. The ripple effects of these tariffs will be felt far and wide, influencing everything from commodity prices to consumer goods. And their impact on the US economy. American factories are at the heart of this issue, with many workers uncertain about their future. Some industries may benefit from reduced competition, while others could suffer from increased costs. Consumers, too, are likely to feel the impact, as prices for everyday items could rise. The US flag flying over business districts symbolizes the national stakes involved. This is not just an economic issue, but a matter of national pride and policy. Super, The Guardian +2, CBS News +2, the White House +2. Newsrooms across the country are buzzing with activity, as journalists strive to keep the public informed. Press conferences and official briefings are becoming more frequent, with government officials providing updates and answering questions. The media plays a crucial role in shaping public perception and understanding of these complex issues. As we move closer to the implementation date, the coverage will only intensify, reflecting the high stakes and widespread interest in this unfolding story. Stay tuned for further developments as we continue to cover this evolving story. For more updates, visit our website or follow us on social media.